The news hit global markets like a thunderclap. Saudi Arabia accepts yuan for oil. On September 1, 2025, the financial world changed overnight. For 50 years, oil was traded exclusively in US dollars, cementing American economic dominance. Now the world's top oil producer had broken ranks, inviting the Chinese yuan onto the global stage. This wasn't just a policy tweak, it was a direct challenge to the heart of US power. The petrodollar system, the backbone of the post-war economic order, was suddenly under siege. Markets panicked, the US dollar index suffered its worst drop in a decade, while the digital yuan surged. Gold soared as investors scrambled for safety. This was more than volatility, it was a vote of no confidence in the old system. Saudi Arabia's move signaled a shift away from exclusive reliance on the US, embracing China as a new partner. For decades, the world needed dollars to buy oil, fueling constant demand for the greenback and enabling US global influence. That era is now contested. The Saudi decision is a geopolitical statement. The unipolar world is over. The first major battle of this new era is being fought not with weapons but with currencies and commodities. The world has entered a new, uncertain and multipolar age. To grasp the shock of today's announcement, we must understand the petrodollar system. Born in the 1970s, it was a simple deal. Saudi Arabia priced oil in US dollars and America guaranteed the kingdom's security. This arrangement created relentless global demand for dollars, making it the world's reserve currency. Nations stockpiled dollars to buy oil, often investing them back into US Treasury bonds. This let the US finance deficits cheaply and project power worldwide. The world in effect subsidized American prosperity for access to energy. The US could print money with less risk of inflation, as global demand soaked up the supply. Control over the dollar gave Washington a potent weapon: financial sanctions. The petrodollar was the backbone of US geopolitical supremacy for 5 decades. It created a feedback loop: military protection for oil kingdoms, oil sold in dollars, dollars funding the military and American living standards. This system seemed unbreakable. For generations, it was the invisible architecture of global finance. Today, Riyadh's move doesn't just add a new currency, it challenges the very logic of this system. The ocean that floated American power is beginning to drain. The petrodollar's dominance is no longer assured. The world's financial foundation is shifting. The rules of the game have changed. The US-Saudi pact was never just about oil. It was a web of mutual interest that's been unraveling for years. America's shale revolution reduced its dependence on Middle Eastern oil, weakening the core bond with Riyadh. US foreign policy pivoted toward Asia, while domestic politics grew more critical of Saudi Arabia. For the Saudis, America seemed less reliable and more distant. Meanwhile, China emerged as Saudi Arabia's top customer, pressuring for oil trades in yuan. China offered investment, technology, and non-interference, appealing contrast to Washington's approach. Saudi Arabia's Vision 2030 requires stable, long-term partners and massive capital. China fits the bill. Accepting yuan cements a strategic alliance with the world's rising superpower. This is a pragmatic hedge against American disengagement, and a bet on an Asian-centric future. The unraveling of the petrodollar pact is the result of a decade of shifting priorities. The world's energy and financial gravity is moving east. The old order is fading. A new reality is taking shape. Embracing the yuan is central to Crown Prince Mohammed bin Salman's Vision 2030. The goal transforms Saudi Arabia from an oil-dependent state into a diversified investment powerhouse. China, as the world's manufacturing and tech giant, is the ideal partner. Accepting yuan for oil deepens economic ties with Beijing and signals Saudi independence from US influence. This move gives Riyadh more leverage, allowing it to play Washington and Beijing off each other. Trading in yuan streamlines transactions, reduces exposure to dollar volatility, and opens new investment avenues in China. It also insulates Saudi wealth from potential US sanctions. The kingdom is betting on a multipolar future, aligning with the East as global power shifts. This isn't abandoning an old friend, it's adapting to ensure prosperity and influence for generations. Saudi Arabia is positioning itself at the crossroads of tomorrow's global trade. For China, Saudi Arabia's decision is the payoff of a decades-long campaign to internationalize the yuan. Beijing saw dollar dominance as a strategic vulnerability, especially after witnessing US sanctions in action. Breaking the petrodollar monopoly became a national security imperative. The digital yuan, or ECNY, is China's technological spearhead, state-controlled, efficient, and immune to Western sanctions. Oil trades in digital yuan bypass SWIFT, creating a parallel financial system. This move sparks a network effect. As countries hold yuan for oil, they'll use it for other trade and investment. China's Belt and Road Initiative, increasingly denominated in yuan, accelerates this trend. The Petroyuan is now a reality, directly challenging the post-war economic order. The era of dollar supremacy is being chipped away, one transaction at a time. The Saudi announcement triggered a brutal market reaction. The US dollar, once the world's safe haven, became the epicenter of a financial quake. The dollar index plunged, forcing a fundamental reassessment of the dollar's future. For the first time in 50 years, the dollar's monopoly on energy trade was in doubt. The psychological blow was as severe as the financial one. The yuan soared, gold smashed records, and investors scrambled for safety. US Treasury bonds saw a massive sell-off as central banks questioned their dollar holdings. If oil no longer requires dollars, why hold so many? This threatens to raise US borrowing costs and could trigger a recession. The mechanism that let America live beyond its means is at risk. Equity markets plunged, energy stocks wavered, and the fragility of the financial system was exposed. The market's verdict: the old architecture is more fragile than anyone thought. This is just the beginning of a long, uncertain realignment. The world's wake-up call has arrived, there's no going back. The Saudi-China oil deal is more than a financial transaction. It's a seismic geopolitical shift. It marks the rise of an Eastern Bloc, with China and Saudi Arabia forming a new axis of power. This partnership is built on mutual economic interest, not shared values. Other oil exporters like the UAE and Iraq now face pressure to follow Riyadh's lead, strengthening the Petroyuan. Traditional US allies in Europe and Asia are caught in the crossfire, facing instability and tough choices. A weaker dollar may help exports, but the broader uncertainty is a threat. Nations will seek greater autonomy, navigating between US security and Chinese economic power. Russia and Iran, long advocates of de-dollarization, gain new momentum. A credible non-dollar alternative for oil sales is now established. The unipolar moment is over. A multipolar, unpredictable world is emerging. Alliances are now more fluid and transactional than ever. The world's finance ministers are asking, who's next? Saudi Arabia's move shattered a 50-year taboo, giving cover for others to follow. The Gulf states, UAE, Kuwait, are likely candidates pressured to maintain unity and serve their top customer, China. Major commodity exporters like Russia, Brazil, and Angola are re-evaluating their options. For developing nations, trading in yuan offers better financing and deeper integration with China's Belt and Road. Regional currency blocs may emerge, fragmenting the dollar-centric system. The global financial order could split into interconnected, competing regions. As more trade shifts to other currencies, demand for dollars and US treasuries will shrink. America's exorbitant privilege is at risk. The domino effect has begun, and the global economic order is being reshaped. The world is moving beyond the dollar. September 1st, 2025 marks the end of the dollar's solo reign. Saudi Arabia's acceptance of the yuan for oil has ended the petrodollar era. The world has crossed into a new multipolar financial reality. The US faces higher inflation, rising interest rates, and a diminished global role. Yet this could also spark a rebalancing of the American economy. For other nations, the shift means more financial sovereignty and choice. A more balanced but potentially volatile global system is emerging. Competing currency blocs could bring both opportunity and instability. Navigating this new world will require diplomacy and cooperation. The unipolar moment is over. The financial system is catching up. The dollar's exclusive dominance is finished, but its story isn't. The future is unwritten. Adaptation will decide the winners and losers. The old order is gone. The world must now pay attention.